Hi, this is Brian Decker with your Market Minute. Wanted to remind you that last week we talked about how the risk managers are chosen. Now I want to take them one at a time and talk to you about how each of the individual managers work. So I'll start with our tactical manager that he's mostly relative strength, meaning he buys whatever goes up. So in 2000, 01, and 02, I know he wasn't around, but the tactical manager in 2000, 01, and 02, that model would have chosen, even while the S&P is down 50%, the NASDAQ's down 70%, there were several sectors that were going up in value, like energy, like healthcare, biotech, pharmaceuticals, like gold, silver, and especially real estate. The REITs were going up very quickly. So those sectors of the markets were going up, allowing you to make money as the markets go down. Very rarely does the tactical manager go short. Mostly he buys whatever is going up, and then he also can be in cash. So notice if you click on the latest fact sheet, which we just updated for the third quarter, so this is ending September of this year, notice a few things about him. Notice that he's never had a losing year. Notice that he's beat the S&P every year, with the exception of in this last year. So in this last year is the model risk year for the tactical manager, where it's just a flat year with the indexes up double digits. So this is the model risk year, but notice that every other year since inception in 07, that he's been able to make money. Average annual returns for this manager, 27%. And the biggest thing that we like is max drawdown. Max drawdown is a statistic that says that the biggest loss that you could ever have taken in the history, so it's an undetermined time frame, it's not in 1 year, 12 months, it's the biggest loss you could possibly have ever taken in the history of this manager's performance is only 12%. The benchmark index is 40%. So we love the downside protection. We love how he works. He's got 1,600 ETFs to look at. And by the way, news this week, as of today, in fact, the SEC approved a Bitcoin ETF. So any retirees at Decker that are interested in Bitcoin, you might see it with this manager, we'll see. But any relative strength, while the markets are going up, these are sectors of the markets that are going up very quickly. Recently, the addition of natural gas was interesting to see. It's interesting watching how he works, but he is a relative strength manager, very, very good, consistent performance. But he, in addition to three other managers we have right now, are experiencing a model risk year this year. Next week, I'll talk about another manager. Hope you have a good week.